So in this episode, you're going to get better at the VCB trading or the VCC trading as we use in the Rich Road. I'm going to teach you about two indicators, ATR and ADR. Now again, we will not use as they are or whatever you have learned so far. In fact, I'm going to make you think and make an indicator in this video itself. And I'll explain that indicator to you. That indicator is absolutely available for free of cost for you to use. And we'll then discuss what are we going to see in the episode 3, which will be the next indicator. And this video is going to help you increase your win rate, give you more confidence so that you can increase your position size in the trades and you can have more green trades and less red trades, eventually leading to you making more money. So let's talk about ATR and ADR. So these are what? Volatility indicators. As we have seen in the episode 1, that we will have 3 kinds of indicators: momentum, trend and volatility. Today we are looking at a volatility indicator. ATR stands for average true range. ADR stands for average day range. These are measures of how much an asset moves. That is important. And the key difference in these two is different formulas, not only the T and D, but they have different formulas which we will see. Therefore, one of the indicator may be suited to a particular style of trading than the other. I'll explain that later in a better way. Now see, the important point to note is none of these indicators reflect price direction. These indicators don't help you decide the direction, that which direction the price is going to go, either up or the down. That is their inherent nature. These are simply volatility indicators. And that is the reason we are using it for your VCB, if that's what you use, but the better word is VCC. That is why we are bringing these indicators in this trading. So let's go in depth about what exactly is average true range, because if we do understand what exactly it is and what is the problem here, then we will be able to make our own custom indicator. So see, Wells Wilder made it, and they are used for determining how much an asset moves. That was the use case, which we are not going to do. It's typically calculated in the dollar or the rupee, whatever currency you are operating in, and it is not in a percent calculation, right? This is what is said. It is not used in percent. Okay. And the thing is, the most important thing to know about ATR is how does it calculates. So what is the calculation? It is pretty simple. It's based on these 3 things. Now here is the theory. I'll explain it to you better in a visual chart. Now see, what will happen is, let's say you are going to calculate the average true range for the candle marked as A here, right? That okay, tell me what is the ATR here? How will this indicator calculate? How will this formula calculate? See, first thing that it is going to calculate is your point number 1, that is, it will simply take the high of the candle A and the low of candle A. You will get a value here. Then it is going to make calculation on point number 2, which is, it will take the high of the candle A, which is here, and then it will compare to the low of candle B, that is the previous candle. It will give a value. Then it will take the point number 3, which will be, it will take the low of A and the close of B. It will give a value. All these are absolute values. So no negative number is considered. If it is negative, it will consider it as a positive only. Now, among these 3, whichever is maximum out of those 3, it will be the ATR for the given candle. As simple as that. This is how the ATR is calculated, and this is how it will be plotted. Conventionally, this is how the ATR is plotted, and in whatever way this helps you, you may use it. So this is the basic calculation. Now, why this calculation is important? It is important to understand because I'm going to teach you how to make an indicator, custom indicator. And when you understand that, you will be in a much better place. Now we have seen the ATR. Let's see ADR. Now ADR is pretty straightforward and simple. It only looks at how much the price moves between the high and low on a given day. That is it. Nothing more than that. So the formula is pretty simple. Day range will be calculated, which will be the daily high and the daily low. That's it. And that will be the ADR. Nothing else. Only the candle you are looking at matters, not any previous candle. And what is the average day range? Well, simply you will use the daily range for the previous 14 candles, divide by 14, and that will become the average day range on any given day. Correct? Now, the important thing here to understand is ADR does not include gaps, right? Why is that? Let's understand. Let's say there's a candle like this, which closed here and opened here. What will be the ADR? Simply daily high and daily low. This will be the ADR, right? Let's say tomorrow this happens. Correct? This is the close, this is the open. What will be the ADR? This will be the ADR. And what will be the ATR here? The ATR will be pretty big. This will be the ATR. Do you understand the difference now? ADR doesn't see this gap as anything. It doesn't matter. But in ATR, the gap matters. Why does the gap matter? Why? Because in the formula, there is closing of B candle, which is the previous candle. So in relation to the previous candle's close, where are the lows and the highs of the next candle? It matters in the ATR, not in the ADR. So what does it give me? Which it simply means that if I want to figure out that on good days, how much a stock moves up in the expansion, basically, will I be using an ADR or an ATR? I will be using an ATR. If I want to see that, how much does a stock move in its expansion? Why? Because it includes gap, ATR, and expansion. Gaps are part of expansion. If I'm dealing with contractions, then I'm going to use ADR, because over there, the range of the candles matter to us. I hope pretty simple point which is understood. If you still have doubts, please use the comment section. So now we have understood the ATRs and the ADR. Pretty simple example here. Candle A, if you want to calculate the daily range of this, it will be the high minus low. Always positive number. So yeah, does not include gaps. Only the range of a single candle is considered. Amazing. So now we know what is the difference between ATR and ADR and how to use these. But is this the correct way? Is this the most efficient way? Again, there is no good or bad or right or no. It's always about efficiency in the markets. So see, what exactly is the conventional use of these indicators? What people do is people use these indicators for keeping their SLs or trailing SLs in the system. How do they go about it? Let's say the price is in contraction and you want to buy here, expecting a move. What will be the SL? They'll simply check what is the ATR or the ADR at this given day. They'll simply see that. If that is coming around whatever the dollar value or the rupee value is, let's say 20 rupees, then 20 rupees, they will take it as the SL from their entry point. That okay, minus 20 rupees will be my SL somewhere here. Some people use 1x, some people even use 1.5x just to be on the safer side. Now, I'll ask you a question. If you still want to use conventionally these indicators for keeping stop losses and trailing SLs in the system, are you going to use the ATRs or the ADRs? The answer is pretty simple. It has to be the ADR and not the ATR, provided your stock is in a given trend. If you're buying it is in uptrend, if you're shorting it in the downtrend. I hope that is understood. I'll still say that this is not the most efficient use of this indicator. Why? Why is that the thing? See, SL will always be either a structural thing that is available on the chart. Higher highs, higher lows. That will be your SLs. That is one way. Or the other way is something called as the expectation thing. I'm sure you have seen people talking a lot about tight SL, small SNs and all that. See, again, they approach this concept from greed perspective. They want to make a lot amount of money, but don't want to lose a lot, or there is basically a greed-driven bias towards using this concept. There is nothing wrong with a tight SL. The context, the approach you have towards this matters a lot. Tight SLs are used when you have an expectation. So let's say I buy a stock and my expectation is tomorrow the momentum has to come. That is my SL. If the momentum doesn't come tomorrow, then my SL is hit regardless of what the price does. In those cases, these tight SLs work absolutely brilliantly well. And if that is your approach, you will see that you will get better even with the tight SLs. So that is why, using indicators such as ATRs and ADRs is not the efficient way. So then what is the point of these indicators, and what idea does these indicators spark in your mind? How can I make best use of these indicators, right? Before we jump onto building an indicator, we need to understand what are we trying to solve here with these indicators. See, we are going to understand the ATR or the ADR, the rich road way. How do we do things here? What is our problem? See, everybody says that, look for VCC. Again, not everybody says VCC. Mostly people still use VCT, but we use VCC. Okay, so they say, tight days, and these diagrams you will see in the book. But don't you feel a bit gap here? Don't you feel a bit of vacuum that it's still a bit impractical? It's not that practical for us. How do I objectify it? So the problem at our hands, what we are trying to do is objectifying the volatility. That if somebody says tight, what does he mean by saying tight? What is he implying? What is the threshold for something being tight at not being tight, right? That is important. So we are going to use the ATRs and the ADRs for objectifying the volatility that yes, now this is tight. So see, you have to understand that as a trader, you will always take the positions in the contractions, consolidations, pullbacks, whatever you refer these things. And we have learned what VCC is. If you have not, make sure you watch lecture 14 available on the channel free of cost from the academy. This is one of the lectures. I've made it available because it is important for everybody. So make sure you watch that. You will understand VCC, but I'll give you a very quick recap here for better revision. So the point is the VCC, in the book you have seen patterns like this, right? This is one type of. The second type is also about inside bars. That is also a part of VCC. If I see I have a candle like this, let's say, and then I have a candle like this, and then I have something like this, and then this. Now tell me, if I take the ADR of each candle, average true daily range, this, if I draw, how much is the ADR? The ADR is this arrow. How much is the ADR here? This is big arrow. This big arrow. So what I'm seeing is going from left to right, what is happening? The size of these arrows is decreasing, right? Which means the range is narrowing, which simply implies that volatility is decreasing. That is contracting. Which means this is the way VCC happens. There is one more way. You will see that, let's say, this is the open. This is the close of a candle, right? Then you will see that there another candle happens on which closes like this. Open and close. And then another happens which opens here but closes here. So a green one, right? Now, if I take the ADR, it is pretty volatile. There is no contraction in the volatility, right? ADR is pretty big for all these. But if I notice where the last 3 days the price has been closing, it closed here, then it closed here, and then it closed here. So my closing is actually happening at a very similar price range. The price is being volatile throughout the day, but the closing is happening in a very same region, at a very tight region. That is also a VCC. So now the job at your hand is to objectify this thing. How do I do it? I will use ADR of rich road, which now will be called as the VCC indicator of rich road. I hope this revision was enough. If you want detail, go to the lecture. But now what we are going to do is we are going to have a look at the indicator and how does it help me. So now we are at the screen and we are watching a stock with the indicator turned on. So this is the indicator VCC rich road, and this is how the buy signals will come. Now you will see that there are a lot of buy signals. The important question is where do I exactly press the buy button, and what this indicator is exactly telling me, what parameters I have to look for. So we'll do a deep work into this, which buy signals you need to look at, which ones you don't, and I'll be talking about the recent trades that I've took so that there is a factor of relativity ताकि आप बेहतर समझ पाए, you understand it better. First of all, this candle colors that you see, right? Blue, navy blue, dark green, there will be light greens as well. These are the rich road moving average indicator. I'm planning to give you this as well, but what is the importance of this indicator? It all depends on your perspective. If you're not sure what is perspective, what is the DNA, please make sure that you watch 1, 2, 3 lectures of the Rich Road Academy. I've made them free for you. So yeah, make sure you watch that, because after watching that, this indicator is going to, you're going to understand it in a much better way. So let's take this example and what we are looking at. See, what VCC is going to give you, it is going to give you an area where there is a compression in the volatility. It will show you that. Now, what is important is, I'll tell you. Let's take an example of 2 stocks. Let's say one stock is going up like this, and it starts showing the VCC exactly at this point, right? This is stock number 1. The stock number 2, it also went up, but it did like this, right? And it showed me the VCC somewhere here. Now, the indicator is only concerned with this entire circled region, which will look the exact same for both. It doesn't concern with all this. Although I will be updating the indicator from time to time if I can make any more changes to it, because this is only the episode 2. So I've made the indicator according to the episode 2. You will get to see more things in the episode 3 onwards. But anyways, so till then, it is your duty. It is your duty to put your brain to work. आप भी अपना कुछ दिमाग लगाइए, तो काफ़ी बेहतर होगा. That is the way you will be efficient. But tell me which one VCC is better. Obviously, the number 2 is better. Why? The answer is pretty simple. Relativity and the framework of 3 to 5 candles where that is happening, right? I'm sure this gives you an idea where this is happening, and I'm sure this gives you an idea where this is happening. Correct. So this becomes very, very important that you understand, and obviously the DNA of the stock. If you understand these things, the indicator is going to be amazing for you. How this will help you, I'll tell you. So now let's go and let's see how this indicator helps you. Now see, this indicator printed, let's go from the right up. This is where you buy. This gave you 2 buy signals this day and this day, right? Now, what is the important thing here? Now, let me just show you the most important thing that has happened in this area. See, what happened here is, if I tell you, there was an amazing structure that I'll show to you. So, what happened is, the price went up and then went down now, right? After going down, it then went up and then went into a sideways. So what exactly happened here? How did it help me? You see this? This gave me SL level. I'm not able to write here. But basically this gave me the SL level, and hence when I'm buying here, जब आप यहाँ पे buy कर रहे हैं, if you have the SL level, just buy. See the indicator, what it is saying, and go and buy it. That is the most important thing you have to see. I'll show it to you probably on a 15-minute. It will look better to you. A 15-minute, again, the dynamics of indicator will work differently. But basically, this was the area, right? This was the area that was showing us the buy. If you see it on a 15 minutes, you will be able to clearly see a higher low. A higher low was formed exactly here that you see. So what you can do is you can continue buying in this area, in this region with the SL here. And that is exactly what the indicator asks you to do so. If I plug in over here. Fine. Now let's see these examples. What is happening? Shall I buy here or not? This is important to understand. See, first of all, fine, you have this, but where is this happening? See what the stock has been doing. Does it look like it will start breaking out from here? Absolutely not. Where is the relativity? And just see how the expansion has happened. It was pretty poor. There was a attempt to expand. And on the left hand side of this candle, was there any good candle? There was no light green, dark green or blue candle. None. In fact, a big red candle was there. So definitely this is not something good buy. And that continues for all these candles. So these are ignored. All these candles are ignored. After that, what happened? Now see, a candle came here. Look at the black line of 10 moving average. It is going below 20. So did this candle do anything? Absolutely not. Nothing. This candle did nothing. Fine then. What candle? Which candle did? This candle took what? 10 above 20. And then the again price came back, giving you 2 buy signals here. Now, what is this in horizontal cycle? It's a V25, V12, which means volatility will definitely be there. And if you want to buy in these 2 buy signals, where will be your SL? Is there a higher low here? I don't see. So your SL has to be somewhere here. And see, just around that level, the price went down and then came up again. Why did the price come up? Because on the left-hand side of these buy signals was a good candle, a blue candle which took the 10 above 20, which this could not do. The volumes were high. And that is why 10 remained above 20 and this candle gave you this jump. Fine. Then again you had these buy signals. A good candle on the left-hand side, 10 above 20, above 50. These are the buy signals. You simply buy these. Where is the SL? The SL level has to be somewhere around this. So what you will do is you can continue buying here in this region and then see the move that you got. Pretty simple, right? It gave you easily 10% buying from here. After that, what happened? The same thing happened again, basically. The cycle kicked in. Again, what are these candles? What is happening? There is definitely more to it. And then, now look at this green and look at this candle. 3.9%. Closing above 10 moving average, right? And giving you an SL level. You buy here as close to the 10 moving average. And then you get to see these moves happening. So this is very important. Once you understand all these things, just take care of one thing, that on the left-hand side of this signal, there has to be a good-looking candle. Again, your candles might not be colored. They might look like this, but make sure there are good candles on the left-hand side. Okay, let's take one more example of a trade. I think this is doing good, still doing good. Yeah, it's still doing good. So again, see this. Now, there is a buy signal here. Will you take this? Absolutely not. Where is the event? There is no event has happened. I mean, right? If you are buying this, then you are in a big trouble. Then you have to adjust your perspective and the understanding of stock markets. Fine. After that, what happened? See this. A beautiful looking candle. A buy signal generated. A buy signal generated. And this gave you what? An SL level. A demand candle basically. And since then, just see the move that has happened in the stock. This is exactly where I about this stock and see how brilliantly the move has come. How much you are up? Up by almost 13% on a huge position size. So this is the importance. Again, if you go onto the left hand side, if you want to see, backtest this, whatever you want to do, feel free to do that. Again, see this. Buy signals here, right? There was an up move. But see the 10 moving average. The 10 moving average was all around together with the 20. And even if you want to buy these signals, your SL has to be somewhere here or either here, nowhere else. Then this candle came again. See, two good looking candles, good volumes, takes 10 away from 20. And then the buy signals are coming. That is the buy area. See for yourself what happened after that. Fine. So this is how, this is important to understand. Again, see this here. Two buy signals. Will you buy these? What is on the left hand side? You will say, oh, there is a good candle. Yes, there is a good candle. But just look at the left hand side. There is a minus 10% move, to which there is only a 3.5% up move. And you are still below the 10 moving average. So if that is a good buy, then again, you have to understand the perspective. Again, see, will you buy these? I will not personally buy. Right. Look at the left hand side candles, pretty atrocious. Okay. And then see what happened again. Same thing kept happening with the stock. Why? Because of where the cycle is of the stock. But once this happened, this blue candle came, and then look at the buy signals that happened. 10 above 20, above 50 with good distance. In this entire region, look at how the price action was in this area. You were in a big range, right? And this led to the big breakout of the range. And since then, stock simply kept going up. So if you have the idea of, the horizontal cycle that I've taught you, of the vertical cycle that I've taught you, and the DNA, the candles, everything, then obviously you're going to do much, much better. Even if you analyze these signals here, right? Let's see these. This was the range and everything was happening within the range. Let's just analyze this area for now. So you got to buy signals here, right? You want to take it? I'll not personally take it. There was earnings as well of the stock, and there is no event on the good left hand side. So I generally don't take these kind of trades. On these two, the event was in the vicinity, but here it just the third time. Again, the horizontal cycle. After that, I'll wait for the stock price to close below 10 and then I'll see. Then what happened? These are all buy signals. Now, what did these candles lead to? I'll show it to you on 15 minutes. So here, now see, if I see this area, what did these up moves lead to? If you are buying before this, your SL was here. Then the SL was here. But now the SL became this point. The higher low was formed. So you could then go buy in this area or in this area. With the SL, simply kept here and then ride the move. So this is how you have to use these indicators. If you use it this way, if you stick to the good stocks with good candles, good volumes, and you understand the horizontal cycle, watch that lecture. It's available for you to watch. If you understand all these things and then put this indicator on the chart, you are going to do absolutely amazingly well in the markets, in all kind of trading. I can show you more. Few of the trades which were taken by my students. So yeah, Hindustan Copper again. See this stock. Look at this candle. 6% up. Pretty good looking candle. 10 crossing above 20 from being below 20, and then there is a buy signal here. Goes up. Which did not happen here again. Why did not happen? I mean, just look at these kind of candles in the expansion. Is this what I want? No. If this candle would have come right after this, then that would have been a perfect trade. But this is an example of a weak expansion that I've clearly taught you. See, and you got a pretty good move, right? See this here. Solid candle, 10 going above 20, above 50. The buy signals are generated. And we can see what kind of move happened. 10 above 20. Look at this candle. Look at the buy signal exactly at 10. Very close to 10. Although in this case, if you are buying on these days, your SL has to be here. Nowhere else. It's just that this worked. But after this candle formed, right, then you can plan your entry about this with your SL below this. But if you're buying in these two, your SL has to be here. Or if you're buying above this, then your SL can be this. Why? Because this is again about a higher low. And great move happened. Again, will you buy this? Absolutely not. Will you buy this? Absolutely not. Look at the left hand side candles. So that is something that you have to understand. Once you get it, once you get all these things, it gets pretty simple, gets pretty basic. So this will tell you where there is volatility contraction. So what kind of volatility contraction is there? It can be candles which are closing very tight. It can be the inside bars. What you have to check is the relativity, the kind of expansion that has happened, and where the stock is in its horizontal cycle. I'll show you ICIL also a trade took by the student yesterday. It doesn't get better than this, right? See, will you buy this? I'll not. I mean, look at this candle. Will you take these buy signals? Yes, you can take. Why? Look at the left hand side candle. Will you take this buy signal? Yes, you will take this buy signal. Look at the left hand side expansion that has happened. And these volumes have come, but they have come because of this. A resistance level was clearly there, visible to you. And these kind of volumes are expected in the resistance level. And then see the move that has happened. Pretty good. Same thing happens here. Will you take these buy signals? Absolutely not. Stock going below 10 moving average with no good candle on the left hand side. These are not good buys. Will you take these buys? Now again, you can't take these buys because there is a good up move on the left hand side, but the SL will be somewhere here. And then yes, the SL is hit this time, but the SL was hit after making a higher low here. Correct? So even if you bought here, the stock price actually, let's say, you bought somewhere here, the stock actually went 10% up for you. In that case, you can at least move your SL here. Definitely more things were there and was very close to 20 and all that. But still, even if you took the trade on these bases, it was a weak expansion. Still, you were pretty in a good position, I would say. So this is how this indicator works, and this is the power of this indicator. It can get you at the right time, in the right stock, at the right price. All you need to take care of are the things that I've mentioned earlier. Otherwise, just pick any stock. There was another trade that I took, Linde India, I guess. Same thing, I mean, just pretty amazing, right? Event has happened. Look at the candles here, pretty good. Good buying signals it gave. And it gave you pretty simple 10% move. Pretty simple. And these are the areas where I simply put 70-80% of the capital I'm using. That's the kind of trading I do, because that's the kind of confidence you have. When you understand these things, again, you can test it as much as you want. If I've said, whatever things I've said, if you stick to those, you will absolutely make a killing out of this indicator. You don't need to do anything else in your life then, if you're fine with that. See, pretty decent candles only within a big red. But see, these buy signals happen within this dark green candle, buy signals, and then see the move that happened. So this is important. These things are important to understand. Again, I'm showing the examples where this indicator is not working the best and where it is working the best. Now see this. These worked best. There was a move. Why? There was an event on the left hand side. That is why this worked. Otherwise, this is a bad indication, right? So it's important to understand. Again, see this. Now you will say, oh, buy signal was there. Because if you have watched the episode 1, you will understand what I'm saying. तो क्या हुआ यहाँ पे? Buy signals थे, but क्या आप buy करेंगे नहीं? Look at the horizontal cycle. किसके अंदर ये buy signals आ रहे हैं? काफ़ी पुअर है. ये चीज़ हमको समझना बहुत ज़रूरी है. DNA देखिए, पर्सपेक्टिव देखिए, CBs फाइंड करिए और ट्रेड लीजिए. काफ़ी अच्छे ट्रेड वर्क करेंगे आपके. Look at another trade. Oh, now see this. This candle, good looking candle this is. If you have watched the videos on channel, you will understand. took 10 above 20, and then immediately you had a buy signal, bought in these 2 days and made good money, right? Now what is happening? Is this a good buy signal that you will take? I'll not take it. Why is that? Look at the 10 moving average. It has started to become flat. So as of now, I'm not interested in the stock, and it's only 1:30 p.m. right now. A lot can happen by the end of the day. So we'll see, we'll wait, and we'll wait what this stock does, and then only we'll take the decision. So these are the recent trades that have been taken, and I'm sure that you will do the justice to this indicator, because now, honestly, all you have to do is look at good stocks, look at a few things in them, and simply wait for these buy signals to occur after that. These are the conditions that have to be there, that the 10 is crossing above 20. It's not crossing below 20. It's in the process of crossing above 20 or has recently crossed above. The DNA is good. The perspective, the horizontal cycle, everything you are clear upon. And then you can use these buy signals to simply place your buy order that day. That's it. That's all you have to do. The indicator will look at the volatility contraction for you and give you the sign that, okay, this is the place where there is a good volatility contraction. Now, I'll show you the settings also. Is there anything that you need to change? Well, in style, you don't have to change. If you wish to change this shape to your liking, you may do so. In the inputs, well, length, let it be 1. Bars back. Now, how long back do you want to go to check for the demand candle? The good candles that you want to see, you can make it 3, 4, 2 as whatever you want to do. Accordingly, the indicator will change and look for the bars. But I'll advise you to keep it at 6. Distance from 10 EMA, that is, if the price is more than 2.5% away from the 10 moving average, it will not give a buy signal. You can make it even less, you can make it even 1, and it will show you that. It will do the changes again. You can see there is no buy signal here, a lot of buy signals are absent. You can make it 1.5 if you want. I will say 2.5 is a good number to stick with. You can make 2 or you can make it 2.5. I'll keep it 2.5, these settings. Restrict is 3, again, you don't have to use it. EMA, you don't have to use it. So these are the only settings, 2 settings that if you wish, you may use. Again, we are only at the episode 2. In the episode 3, the indicator is going to get published again with changes, because you will be learning about something called as the RSI. Right? So then I'll see you in the RSI episode number 3. Till then, make use of this indicator and please make some good money from the markets.